Welcome back. Pull up the gift Nifty. It's suggesting a bit of a flat start. Yesterday, the Nifty closed almost at that 19,500 mark, a record close for the sixth consecutive session. And despite subdued global markets weakening, Asian markets screen, the SGX Nifty is still holding pretty firm, just down close to about 13 points. So what about individual stocks? Our entire research team is standing by with CNBC-TV18's list of top stocks for the day. Guys, happy Friday to all of you. Abhishek, let me start with you. The latest on Reliance looks like it's one step closer to the demerger of their financial services business.
Well, yes, as you mentioned, it's one step closer to demerging their financial entity of Reliance Industries. So NCLT Mumbai has approved the scheme of arrangement for Reliance strategic investment. So RIL will take necessary steps for share allotment and listing of Reliance strategic investment. So the company will be renamed and listed as Jio Financial Services. So earlier, shareholders and creditors had approved the spin-off of Reliance Strategic Investment Limited. So Jio Financial will bring in treasury shares worth about rupees 1 lakh crore of RIL as their capital. So NBFCs today have a leverage of about 5 to 6 times. So over there you can assume a bare minimum 3x leverage would mean anywhere close to about 3 lakh crore of AUM of Jio Financial Services. So currently if you take a look, Bajaj Finance is at an AUM of about 2.7 lakh crore with a leverage of about 4.8 times FY23. So this could be a disruptive in the NBFC space. Veteran banker KV Kamath will be the non-executive chairman. Macquarie in their earlier note had written that Jio Financial Services will be valued at more than rupees 1.52 lakh crore and become the fifth largest financial services firm in India. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. That stock will be supporting in trade today. Well, Mangalam as well joins in to tell us about Titan. Mangalam, valuation-wise, expensive, always been beautiful numbers, right?
Beautiful numbers indeed, and perhaps will remain expensive given these growth numbers that the company is posted. Remember, it's a big company, twice the size of Kalyan right now, and still shown a revenue growth of 20% year on year, and jewelry business has grown at 21% year on year, and this is on a high base. Remember, quarter on quarter as well, the jewelry business has grown around 21%. The number that really stood out for me is actually not a number, but the company's commentary that the growth this time around was led by buyers rather than an average ticket size that grew. So basically, more number of buyers in this quarter. That's telling you that consumer sentiment perhaps is improving than just a small clutch of buyers buying more. And this, remember, was a quarter of volatile gold prices. We had seen a big surge as well. Good sales coming in Akshaya Tritiya as well as the wedding season too. Watches grew about 8%, that's the analog watches, but smart watches, wearables grew 84%. And Titan's moving much beyond just jewelry right now, and we've seen that with eye care growing 10%, but importantly, Taneira, the saris business, also grew around 81% odd. CaratLane, another business, also grew 32%. All said and done, great set of numbers, but remember the stock has rallied about 8% in the last 1 month. So let's see how much of that was priced in. People perhaps hoping for a good update coming in.
Got that, Mangalam. There's a massive Taneira showroom, by the way, near my house. Been meaning to check it out. Looks very, very impressive. Those are very impressive numbers from Titan as well. Nigel, Tata Steel, update is in. How does it look?
Yeah, well, they're given a heads up at the end of the past quarter itself that they're going to be having some shutdowns, which will impact their numbers. So the numbers are more or less in line. We're just going with green on this one since there's no negative surprise. In the India deliveries, it's looking good. It was up close to around 18%. Europe was down by close to around 8%. And Thailand, which is very small, that as well was down by more than 10%. The factors that play as well, India delivered a good set of numbers that's driven by NINL. Remember, it's come into their fold and it's ramping up quite well. So that's one point out there. And the domestic sales have done better because they said the exports sales haven't done as well. Now, the Europe business, you'll say, hey, why is it such a big degrowth? Because they're informed at the end of Q4 that there'll be a shutdown at the Netherlands operations. And that's precisely what's played out. And if you look at it, they're prepared for this. Because the dispatches, that's the deliveries, they're down by around 8%, though production is down by more than 25%. But since those, the numbers are more or less in line, we're going with green on that one. Mangalam, what about Dabur though? How are those numbers?
Well, Dabur was actually much better than what Marico reported yesterday. Marico said that they hadn't seen, rural growth, but for Dabur, they've increased their, reach in the rural markets itself. They have a couple of projects which are undergoing and expanding the presence there. So they said that trends in both urban and rural have shown signs of improvement. The consolidated business of the company will grow more than double digits, more than 10% that is, which includes their Badshah Masala business as well. But the growth this time around has been led by some of the categories. Remember, same time last year we were working with a high base on their healthcare and personal care business because it was pre-COVID levels, rather COVID levels. But now it has come back into the base, and as a result of which healthcare and home and personal care have seen growth in double digits and high teens as well. Oral care and healthcare have also grown in low double digits. Badshah Masala, their acquisition is now scaling up, so high teens growth for that business too. The only business that did not do well for them was the juices portfolio, and that's because the summer in the northern countries, rather northern region of the country, was moderate, and there were unseasonal rains as well. They will, put back all their gross margin savings into advertising, so as a result of which EBITDA margin will largely be flat.
Okay, got that. So more aggressive in the ad spends there, but overall good commentary from Dabur. Thank you, Mangalam, for that. Speaking of Q1 updates, we have some coming in from a couple of real estate companies as well. Sonal, tell us more.
Well, let me start with Sobha. The numbers, at least on the pre-sales side, look good. It was a 28% increase on a YOY basis. However, we saw volumes coming in flat on a YOY basis. This number, in terms of pre-sales, is the fifth quarter of consistent record high sales bookings. However, this was led by higher realizations, which grew 25% on a YOY basis. Realizations improved due to price hikes and change in product mix to premium products. There were no new launches in the quarter, so whatever sales happened from the existing project, and especially 0.8 million square feet was released from the ongoing project, especially from Kerala. So the stock could open in the green, but we'll have to see where it goes because this was largely led by higher pricing and not higher volumes. For Phoenix Mills, it looked good. Their retail consumption across malls grew 18% on a YOY basis. This was led by 2 additional malls as well in December and March. Retail collections were up 18%. In terms of occupancies in their 2 hotels, for St. Regis, the occupancy was down on a YOY basis, but their average room rentals increased by 38%. Their Agra hotel also saw an increase in occupancy and an increase in their average room rental as well. So Phoenix Mills looked good in terms of their operational update.
Okay, all right. Sonal, thanks a lot for that. Mangalam, Kalyan Jewellers as well, looking quite good. Sonal was blushing as we were coming out of that.
I have had no contribution to either Kalyan Jewellers or Titan or Phoenix Mills as well in the quarter. But I have to tell you, it seems like people are buying jewelry hand over fist. Titan did 20%. Kalyan on a lower base went one step ahead, 31% growth in their overall consolidated business in this quarter. And they said that demand momentum sustained throughout the quarter. In fact, this 31% is actually lower only because of their Middle East business. The India business saw a revenue growth of 34%. There has been, blended gross margin decline, but that's because of their store mix. A large part of their sales growth is coming from franchise stores as well. But that's nothing really to worry about so long as the companies adding new stores, expanding their presence. Once, the companies see their strong growth coming in, only then do they commit monies to expand their stores. And most of that coming in the non-South markets, which have higher share of studded jewelry, which also improves their margins. In fact, over the last 1 year itself, if you compare the stock price of both Titan and Kalyan, Titan has rallied about 42, 43%, whereas 46% for Titan, and Kalyan Jewellers 142%. So, of course, on a lower base, it's growing much faster, and the valuation gap between the two is narrowing.
Wait till Zomato or Swiggy gives an update, and then we can point fingers at you. See, you contribute, between you and Sonal, you all have contributed to the growth rates over there. But let's go across now to Surbhi for some more stocks which are in the news.
So first on my radar is Tatva Chintan. There is a board meeting on 11th of July to consider a fundraise. Next is Subros. Now government has approved the draft notification to mandate the installation of AC systems in truck cabins. Now Subros is one of the manufacturers of the auto air conditioning systems, and it had rallied close to 20% when this notification was first announced. So let's see how it does today. And Sanghi Industries is also on my radar because India Ratings and Research has downgraded the credit rating to D from a BB earlier. They have downgraded on account of deferment of payment interest, but the company says the deferment of interest is not to avoid any default or bankruptcy, but they needed the extra liquidity for a potential alternate use in case of any emergency arising out of the cyclone. The company has received adequate cash flows in June 2021.
Okay, we'll watch out for these. Yeah, remember Subros, when the idea was first sort of brought to the street, stock went absolutely crazy. ACs in truck cabins. Let's see what it does today. Quick recap of our stock list. The ones that have positive news flow around them are Reliance Industries, Titan, Tata Steel, Dabur, Sobha, Phoenix Mills, Tatva Chintan, Subros, as well as Kalyan Jewellers. The only stock with negative news around it is Sanghi Industries because of the miss in the payments. Okay, let's move on. We've got Ekta joining in now with a couple of interesting brokerage notes to watch out for today. Ekta, what's on your radar?
Thanks for that. Well, I'll start with JP Morgan and Reliance. They're overweight with a target price of 2960. They've said the JFS demerger approval from NCLT has come through. They expect details at the AGM. As earnings remain strong, they believe improving news flow should drive the stock higher. Citi has written on TechM, sell target price of 905. They are surprised with the 17% up move from the April lows. This is despite a business outlook as communicated by the company plus challenges highlighted by peers. Some of the reasons for the rally include joining of Mohit Joshi, CEO designate, cheap valuation, strong buying by DMF as well as insurance companies. Goldman Sachs buy rating on Titan with a target price of 3175. They say that the jewelry sales growth was stronger than expected. 4-year CAGR improves to 23%. And I'm wrapping it up with Nomura on Dabur with a buy rating, target price of 640. They believe it was a good recovery of volumes and sales.
Oh, yes, absolutely. Very, very smart update for the first quarter coming in from Dabur. Thank you, Ekta, for all of those brokerage notes. We'll keep them in mind. Quick break right now. On the other side, Dipan Mehta, Director, Elixir Equities, joins in. We discuss market fundamentals and a couple of stock ideas. Later, we'll also connect with Vikas Gupta, MD Operations at PG Electroplast, to discuss the company's business outlook.